The presidential election is just around the corner. So, what does that mean for the housing market? You may be wondering, what is the impact on home values and mortgage rates during an election season? Well, let's look from a historical perspective. This graphic shows annual home sales going back to 1978. This is through 11 elections. Each year with an election is noted in blue. The year immediately after each election is in green if the existing home sales rose that year. The only year when prices declined after an election is in orange, and that was during the housing market crash, which was far from a typical year. So, what about interest rates? While no one has a crystal ball, maybe we have some optimism that interest rates will continue to come down more around this time. And why? Because that's what we've seen in the past. Don't expect anything major, but yes, interest rates have a tendency to go down around presidential elections. This graphic shows the fluctuation of interest rates during election years. I know this is a lot of numbers, but look at the far right side and see the green there. Those are the presidential election years when interest rates came down. So you can see that we're talking about 0.25%, 0.5%, with the exception being in 1980. So take a look at that 12% to 14% interest rate for mortgages. That's why people who owned homes back then like to remind us that, you know what, 7% really isn't that bad. And right now it's going down and even less than that. But you can see overall, with some exceptions, 8 out of the last election years, we've seen interest rates go down. Of course, mortgage rates go up and down daily. Today, Bankrate.com posted that the current average interest rate for a 30-year fixed mortgage is around 6.8%. What about the people who are on the market right now or need to go on the market to sell this year? Well, be patient. We really are in a situation where standing inventory is up. We have more houses on the market right now. Why? Because they're taking longer to sell. Buyers have been taking longer to make decisions because of the interest rates right now. Well, what about if you are looking to buy a house? Well, right now you have near perfect conditions. This is because sellers are having to be a little bit more flexible and willing to negotiate. Many homes on the market are seeing price reductions right now, so this is the time to get in. You can always refinance when rates do drop, but if you wait until interest rates to drop, then you may have more competition and less buying power later. Sellers right now are willing to help buy those rates down or maybe make repairs and help more with closing costs. And this is true for some new home builds. Some builders have some great incentives for buyers, especially now that we're at the end of the fiscal year. They are ready to show you some bargains. Just know that builders end their fiscal year at the end of November. So this is a great time to start looking. This may not be the case when people come back to the market. The bottom line, while your mortgage loan rate is an important factor when buying a home, it is not your only consideration. So if you're thinking about buying or selling a home right now, partner with a trusted real estate agent to weigh your options and decide what's right for you.